But when it comes to finding companies that I like, and I try not to give advice, especially stock advice, because everybody's got an opinion. But I try to explain to people, like when you go to Target, okay, and you need to buy something, do you just buy the first thing that you see, or do you comparison shop? And now it's really easy to comparison shop because you can use the internet. You don't even have to leave your house. You can look and see what the price is. Like I needed lacquer, spray lacquer for a painting I did. So I could look at Lowe's, I could look at Home Depot, I could look at Amazon, I could look at Target, and it turns out my local hardware store had it for the same price as all of them. But there were differences in the price, right? So why would I pay the extra $1.50 at Lowe's if I can get it for $1.50 less at Target, especially when it's less than a mile away? So comparison shopping is one thing. So you wait for things to go on sale, right? So when you like grapes, so when grapes go on sale at Aldi, you go and get grapes at Aldi, right? And you wait until they, maybe you wait till they go on sale to do that. So, but here's the other part of that equation too, is that it has to be something of worth. So you just don't buy things just because they're on sale. You only buy things that are quality when they're on sale, right? So if it's junk, I don't care if McDonald's hamburgers are 39 cents or if they're going to pay me 39 cents. I'm not eating that crap because it's McDonald's hamburgers. It's made by a 16-year-old who doesn't know anything about food safety, and it's a terrible product. I am not putting that in my body. It doesn't matter. So to me, I don't shop for McDonald's hamburgers because to me that's nothing I want a part of. So these junk assets that are out there, these companies they're calling them zombie companies now. They say about 20% of the market are so-called zombie companies, which basically means they don't do anything, they don't produce anything of value, and all of their numbers are basically made up. They're just a company. They're like the dot-com companies in the late 90s. They're just a name, and they've got employees, but they really don't do much, and they have no inherent intrinsic value. And that's the thing. These growth stocks, if you Google intrinsic value of, well, maybe not Tesla. That might have a very small intrinsic value now, but some of these growth companies, you will have zero by the forward. It's the FCF formula. You'll have a zero there for intrinsic value because all of the price of the stock is speculative based on future earnings. Not what they're doing now, not what they're making now, not what services they're providing, but what they might 5 or 10 years from now. Unbelievable. It's like building a castle in the clouds. There's no foundation. It can fall at any moment,